Well, folks, as a stock market investor, every once in a while you wake up to a headline that is just, pretty dang big and pretty darn shocking. That's exactly what we woke up to here today. Starbucks replacing their CEO. Their CEO basically, I would say fired. You're fired. You're out of here, okay? He's out. They're bringing in Mr. Taco Bell, the Chipotle CEO, to come run the show. Now, we call him Mr. Taco Bell because before he came over to Chipotle, he used to run Taco Bell. And over the past 5 years, the standards at Chipotle have gotten more and more close to Taco Bell, just to be quite frank. So we're going to speak about this at the top of the video. Obviously, just huge news in regards to this. I want to react to a couple Wall Streeters talking about the situation, kind of their perspectives, and at the end we'll react to this video here. Investors need to be cautious about buying stocks amid a real recession risk. Okay, by the way, I appreciate everybody joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. Appreciate y'all. Okay, so huge news here today. The stocks are moving massive, right? Starbucks stock up 20+%. Chipotle stock down about 8 or 9% on this news here today. Keep in mind, Chipotle stock would be down a lot more than it is if it wasn't for such a good day in the market. I mean, look at this. We got 9%, 5%, 4% moves all over this market here today. So it's a pretty dang good day in the market. So I think if this news came out on a bad day, Chipotle stock might be down 15%. Now, obviously, this is, it matters for me because I obviously own a pretty good amount of Chipotle put options. So, we'll speak about that if I'm going to keep those put options, things like that, okay? So, here we go. Starbucks announced Tuesday that it's replacing their CEO with the Chipotle CEO, Mr. Taco Bell, as the coffee chain tries to reverse a sales slump, sending stock soaring more than 20%. Chipotle stock obviously down big. We spoke about that. Now, this is going to be effective very, very soon here. The old Starbucks CEO is basically out now. And then as far as the Chipotle CEO, he's leaving at the end of this month, essentially. Now, the other gentleman took over as chief executive in March of 2023, and since that time, the stock's done very, very poorly. Very, very poorly. Now, Howard Schultz, the big dog at Starbucks over time, really the guy who built the company, he's made a few mistakes over the years of essentially hiring a CEO. The new CEO does really bad, and then he would have to come back. Or now in this situation, they're bringing in Mr. Taco Bell to run the show, so now he doesn't have to come back. So he doesn't have the best. He doesn't have the best decision-making skills when it comes to hiring a CEO. I'll say that. He's done a phenomenal job building Starbucks, but when it comes to picking CEOs, he has a 100% fail rate in that, unfortunately. Now, Elliott Management took a big stake in Starbucks. So as far as are they happy with this? Listen, they're very happy with this. Elliott's extremely happy with this move. Listen, Mr. Taco Bell, here's the bottom line with you got to understand with Mr. Taco Bell. Mr. Taco Bell is absolutely phenomenal for a stock price. He understands how to bring up margins, and he understands how to get the most kind of juice squeezed out of the lemon, okay? Now, with Chipotle, he was given a Ferrari. Let's just call it what it is. When he came into that company in 2018, he was given the keys to a Ferrari. I mean, Chipotle is the most exciting, innovative, restaurant-related concept we had seen in the United States of America, honestly, in decades, right? Absolutely, he was given the keys to a Ferrari. He got the keys to a company that the food was so good for so long that it built a cult-like following. I mean, people like myself that were going to Chipotle back in like 2010, 2012, 2014, we built that brand into something that was so successful because the food quality was so good. So he got keys to this Ferrari that had this, incredible potential. And what he did is he took that Ferrari and he drove it the fastest it could possibly go, right? But the issue is he never changed the oil in that Ferrari or did anything. And so what happened over time is the Chipotle standard got lower and lower year after year after year until today, which it's incredible. I went to Chipotle a few nights because I just really wanted to see, is it gotten any better since last time I went a few months ago? No. It got even worse. I mean, it's just incredible how the fall off of Chipotle in terms of service levels, quality of employees, and food standards. It's shocking to see how bad it's gotten there. But the moral of the story is he's phenomenal for a stock price, right? Now, is it phenomenal for a company for the long term? I don't think so. Not in my opinion at all. But for a 3-5 year span, it can be very, very good. So him coming into Buc-ee's, and one of the other jokes I made is, the good news with Bucks is they don't have any food standards at Starbucks. There's no such thing as food standards at Starbucks. So I don't really see there being a way he could bring down the food quality standards at Starbucks, okay? So moral of the story is, Wall Street has a lot of respect for Mr. Taco Bell, and they should, because he's done a heck of a job at Chipotle in regards to getting the stock price significantly higher. I believe he is a leader Starbucks needs for this pivotal moment in its history. He has my respect and full support, says Howard Schultz. Okay. Now, during Mr. Taco Bell's tenure at Chipotle, the stock did absolutely phenomenal. We all know that, right? Now, you have to ask yourself a very important question here. Very important question. And that question is, why is a Chipotle CEO leaving Chipotle, going to Starbucks? Why? Think about this for a moment. Chipotle's supposed to have all this growth in future years. Chipotle's been a stock that has performed tremendously. Meanwhile, Starbucks is seen as saturated, mature company with not much growth. Why would a guy like this leave Chipotle and go over to Starbucks? Right? Is it out of the goodness of his heart, Mr. Taco Bell's? It's like, oh, Starbucks needs help. Let me go help them. I don't think so, right? So why is he doing that? There's really only two possible outcomes here. One possible outcome is he's looking at a situation at Chipotle and he's not liking what he sees. He sees a company that is going to have some really rough comp store sales over the next year or two, and he's going to be looking at a stock price that could be crashing, right? And he doesn't want to be around for that, because that's going to be a whole mess. Then they're going to have to bottom things out. Then they're going to have to bring it back, right? That could be one potential. The other potential is he believes he's going to make way more money at Starbucks. And the way he would make way more money is, let's say he believes Chipotle stock's not going to really move much over the next couple of years, so his stock options aren't going to do very well. Meanwhile, he's looking at Starbucks, and he's like, I could get a lot of stock options there, and I think I can bring that stock to a $150 level, $170 level, something like that, so we can make a fortune in regards to stock. That's the only reason. He's not doing this move out of the goodness of his heart. It's got to be a situation. There's no other way you can justify it. Like just run it, run the scenarios in your head, put yourself in his position, and you're going to find there's no other reason other than that. If he really thought Chipotle was going to have this massive growth opportunity over the next few years and the stock was going to boom, he would not leave Chipotle. It does not make sense, right? Chipotle, at least over the past few years, it's starting to fall apart very quickly here, but at least over the past few years, has been more respected than Starbucks. So you wouldn't go down a level, right? You wouldn't go down a level. You're only going to go to Starbucks if you think you're going to make way more money on that, right? That's it. So I don't think this bodes well at all for Chipotle. I do think it bodes decent for Starbucks, though. I think there's a pretty high probability he'll do a pretty decent job at Starbucks. Do I expect the stock to go up 700% over the next few years? No. Because the difference with, he's not being given the keys to a Ferrari. He's getting the keys given to a minivan, okay? And the minivan, it runs great, and, it does its thing, it does its job. It takes the kids to soccer practice and back, and to school and back, right? Does its job. But this is no Chipotle. This is no Ferrari, okay? And so my opinion is, I think Mr. Taco Bell's making the right decision. I think Starbucks is making the right decision. And I think Chipotle's screwed. I really do. I think they're in a really tough spot here. The fact that man's out and he's leaving, he's dude didn't get this far by luck. I can tell you that. He didn't get this far by luck. So there's some problems there. Let's jump into these videos and react.
The CEO, Laxman Narasimhan, with Chipotle's Brian Niccol, and joining us this morning with his reaction is Evercore ISI's David Palmer. For now, at least, still has a hold and an $80 target. David, good to see you again.
Thanks, Carl. Big news.
I looking at your note this morning, you argue that it's great, but reclaiming what you call the premium brand is going to be trickier than turning around Chipotle.
Well, it's going to be interesting to watch
Listen, he didn't turn around Chipotle. Chipotle had a health matter, okay? And it hurt their comp store sales for a year. He got given the keys back to that Ferrari at a perfect time. And remember, Chipotle's food quality and service levels were so high back in those days that they were able to get through that whole E. coli situation, which was pretty amazing because they had such a cult-like following. So I when I look at that, I don't think he turned Chipotle around. Chipotle was already a beast. They were just going through a tough health situation there. They got out to the other side because of their cult-like following, and then they went from there, right?
Steps. I mean, clearly, Starbucks has a brand momentum problem in the U.S. Their recent trends have been down. Same-store sales-wise, there's people that have talked about doing things like spinning off China, but this is really a U.S. brand turnaround challenge. The good news is that Brian is the guy. He seems like the one person that has this omni-channel background, operations, marketing, CRM or customer relationship management, and he brings all of those tools to Starbucks. Clearly, this is a premium brand, and it's not one where you have this food value advantage like Chipotle did, but he seems like the guy for the job. And one big thing is you have Howard, the founder, that's still out there. You needed somebody with a gravitas to essentially make this his own company and attract talent to join him on this brand turnaround.
So are you calling Niccol the one restaurant executive who has the gravitas to do exactly that? Why not re-rate?
Well, we'll right now we're going through calls with the companies in both cases. So everything right now is under review in terms of how we view this company, how we view the earnings opportunity. I think everyone right now is grappling with that. And so we have a lot of questions, and we'll be talking to both companies.
I mean, the move today is pretty big. I just have a question about investor expectations and where they are relative to what we can actually expect as far as a turnaround. It reminds me of when Mary Dillon, the former Ulta CEO, was appointed CEO of Foot Locker, and that stock went up more than 20%. She was a great CEO, and this is nothing against Mary, but then it was, not a quick road to recovery on the earnings front in terms of a turnaround for Foot Locker. So what's realistic to expect after a move like this?
True.
The old Starbucks used to talk about an EBIT margin of something like 15% being realistic. Right now, the street numbers are more like 16.5% margins expectation for fiscal 25. At the higher number, would be, if that's in play, that would be high teens earnings upside from where the street is over time. The valuation's in the low 20s. I think some people are going to be thinking that this can go back to its old rating in that high 20s at least type valuation. That's where the dreams are going to rest. But you bring up a great point. This is not going to be necessarily easy. What makes Starbucks special is that human connection, that premium brand positioning. The baristas have to be energized. Clearly, they've had some union problems. Clearly, they've had a lot of new products that haven't worked. They need to rediscover what the core is, solve these operational problems in a way that re-engages their baristas and the consumer. So they've got a lot of heavy lifting ahead, but this seems to be the one executive that has experience in a lot of these areas.
Yeah, so the thing you got to remember about Wall Streeters, though, in regards to Wall Streeters judging these companies, they absolutely hold a lot of weight, right? What they say matters because a lot of investors make decisions. But you also have to remember a lot of these Wall Streeters have never run a business. They've never been in management. They've never done any of those things, right? And the reason being is it's not in their career path. These folks get out of high school. They go to college usually 4, 6, 8 years, right? And then they get hired in an entry-level, low-level analyst job or whatever it is on Wall Street, right? And they start kind of working their way up the ladder from there. And by the time they're in their 40s or 50s or 60s, they're at a pretty good position at whatever Wall Street institution they're at, right? So when it comes to judging management in terms of the details, you can't trust those people for that because they've never done it. They've never managed anything. They've never even run a business, so they wouldn't know how to judge that. But they do know how to judge if a guy's margins are going up over time, right? If the profitability is going up over time, if the revenues are going up, because those are all data points that are facts. They're not like opinion based, right? And so, somebody that's a high level operator can go into like if I had Steve Wynn here, right? And Steve Wynn and I took him around different resorts, he'd be able to go detail by detail on exactly all of the things those resorts are doing well, all the things they're not doing well, right? Because he's actually done that. These Wall Streeters, they've never done anything, right? So it's like, just don't put too much faith into any of the details around that. Basically, they're just going off of, he took the margins up at this company in the past, maybe he can do it again, those sorts of things, but they've never done this, right?
Manager at DCLA and a CNBC contributor, Sarat, always good to have you with us. Just your take, I know you're not in it, your take on the Starbucks news, getting Brian Niccol, a master operator, one who's, seen his stock go from 6 to 50 plus in the matter of his tenure?
I think it's a great move. I mean, Brian's done a phenomenal job. He's turned around the company. And I think this is a great new way for him to kind of get at something that needs to be turned around. I mean, we all know
he did not turn around the company. Like it's crazy. Like they're not even getting that data point right. He did not turn around Chipotle. He got a freaking Ferrari. Okay, the Ferrari had a flat tire. Because the Ferrari had a flat tire did not mean the Ferrari was ruined and you got to turn it around. He changed the tire and got the thing moving. Come on, man.
Starbucks has a lot of work to be done. And unfortunately, the last 2 years, it didn't really do well. So I think it could be a good opportunity there. There's a lot of low-hanging fruit at Starbucks.
Yeah. The other big story of the morning, of course, is Home Depot. Disappointing guide, even though Wall Street pretty much reset expectations going into the quarter. What does this tell you about some of the earnings that we're expecting?
It's just confirming what we're seeing.
Yeah.
We're seeing the consumer slowing down. Retail sales are coming down. You've seen it across McDonald's. You saw Starbucks. All these other companies are reporting. So I do think you're seeing that. At the same time, you're seeing PPI number today, CPI. So it's confirming what the Fed needs to do, which is basically start cutting rates. The big question is the Fed going to be cutting rates for the right reason? And hopefully it's more because inflation is coming down, not because our economy really needs it more.
When you listen to economists and they're pulling forward, it sounds like their hair's on fire and they're going to be cutting for the wrong reason. But in your view, what is the reality? What is going to happen in your view? And for what reason?
I think you get 25. I don't think you want to scare people to say, wow, things are a lot worse than they are. But if inflation is coming down faster than, which I hope is retail sales and the consumer, then I think the economy is in a better place.
There are a lot of people in the market that think the Fed missed the boat in July, that they should have cut. What do you think his message might be in Jackson?
This guy, they got this guy on. This is, what's his name? Frank? He's like the guy that keeps track of all the high net worth individuals and what they're up to, what they're doing, what they're buying. Like, this is so random having him on there asking questions.
I think listen, we can't be that reactive all the time. We know they've been pretty much saying we are going to be cutting. So if they do it now and they're going to do it after we get this volatile 9%, correction, I think they're just going to be data dependent at that point. And also they're just respective of the election coming up too. But I think they're on the right path. And if they went to 50 or they cut last week, I think you'd see the market down a lot more than it is today, just because of the reaction of they're seeing more things that we're not seeing.
Yeah, more volatility into the election.
Absolutely. I mean, when you get slower earnings, you've got companies that are going to miss, and then all of them are going to guide down. We've seen that. The guide down for the next couple of quarters is pretty wide now. So I think that's where valuations are really going to matter. And I think some of these, even Starbucks at these levels still trading at 25 times earnings. So what are you stepping into in terms of depressed earnings versus true valuation? I think, and the other part is dividends. Right. Dividends are going to start mattering because as you see interest rates coming down, that's where you want to be.
Yeah, one trouble spot with Starbucks, and one thing that makes me not attracted to Starbucks as a buy, is one I was looking at as a potential buy over the past few months, but one I decided against is really the balance sheet. The balance sheet of Starbucks is not in great shape. It's not. And so you have a company there that, the numbers aren't the best, right? And the income statement's not the best here recently. And the balance sheet's, I would describe the balance sheet as very poor, actually. Not ideal. Next one up here. Investors need to be cautious about buying stocks amid real recession risk.
Reaction to PPI, what it means for rate cuts, alongside tomorrow's consumer price inflation data. Joining us now, Morgan Stanley Senior Portfolio Manager Jim LeCamp. Are you telling your clients to buy in the wake of what we got last week, Jim?
So look, we may have put a low in last week, and I think it's entirely possible. But historically, whenever you do set a low like that after a 10% correction, you retest that low. And let's not forget that August and September are historically our worst 2 months of the year in the market, and we're still in fairly early in that time frame. So I think investors need to be cautious about willy-nilly going ahead and thinking there's a green light and to be aggressive and taking too much risk. Let's also not forget that there's a real risk of recession here. One of the reasons that we might be seeing prices ameliorate or the inflation rate ameliorate is because consumers are tapped out. We've seen delinquencies go up. We've seen foreclosures go up. We've seen bankruptcies go up. So there's some real risk in the market. Do I think we set a low in last Monday? I think very possibly we did. But even if we did, I think it's probable that we're going to retest. That happens about 2/3 of the time.
So how do you prepare for the risk?
That's fair. I can't really disagree with anything he said there, just to be quite frank. That's all very, very fair. Now, let's take a look. Now, by the way, the question is, can Starbucks keep these gains? Watch Starbucks over this next couple weeks here. Let's see if Starbucks can hold these gains, or next thing you know, you see it right back below 80. That is a little food for thought there. We'll see kind of what happens, right? Should be very interesting, but obviously very green day out there. Great day for me in the market. I hope it's a great day for you guys in the market. If we go ahead and look at the consumer stocks watch list of these stocks that have been just devastated, geez, yeah, good days there. Good days. A lot of those stocks bouncing back hard here today. By the way, do I have EL on my stocks watch list here? Oh, I don't. I need to add EL because I do own EL now. I'm an EL shareholder, baby. For the first time recently. So, gotta add that baby on there. There we go. EL, no, that's a turnaround play. That's a turnaround play there. Let's go ahead and take a peek at big tech here today. Big tech looking pretty darn good. Every single stock in big tech is green. Nvidia is the biggest winner chicken dinner of the bunch out of big tech here today. If we go ahead and take a peek at the safety stocks watch list, a little bit more of a mixed bag here on safety stocks. About a little more green than red in regards to that. Commodities here today. GSG down about 1%. Great to see. Inflation's really dead at this point in time. So that's good. Commodities are dead at this point in time, which is good. The housing stocks watch list, pretty green day out there today. Doesn't surprise me considering such a good day in the market, right? My Mag 6 are having a good day overall. Not a great day, but a good day. I'll say that. Good to see ELF coming back here. PayPal, if we can go risk on in this market, risk on meaning the Russell can start rolling, people can start feeling more confident, PayPal's going to make a huge move, man. I can just see the way it's performing versus a market on down days and up days, and it's looking pretty darn good in regards to that one. So I like what I see there, and I like what I like what the new CEO is doing. I got to say, he's doing a pretty dang good job. Alex Chris, bravo.
Of recession, even if that isn't the base case.
Yeah, I think investors need to be aware that recessions are not good for stocks. Most bear markets occur during recessions. So I think there's a real risk of it. When you look at the employment rate, when you look at the kinds of jobs that we've been adding over the last year, mostly part-time jobs, we've seen real softness in full-time jobs, and we've seen real softness in also the consumer's ability to absorb where prices are. Even if the inflation rate isn't going up as much anymore, prices still aren't coming down. So prices are still an issue for consumers. And consumers are also going to have a hard time buying houses in here. Yes, the mortgage rates might come down a little bit, but prices are still very high. Home affordability is still very high. And so it's a tough environment. And I think investors need to be aware that the market may be more volatile. If we do enter a recession, it's very likely we would have a bear market next year. So I think we need to be careful about that.
Jim, I wonder how your view kind of...
What he says there is fair. Very fair, right? That's all potential. But on the flip side, oh man, so many different things can happen, right? We've been kind of waiting for the big recession. When we say the big recession, we're talking about the one where we see a big unemployment cycle, right? Unemployment rate goes to 6, 8, 10%. That's what we're talking about. And we've kind of been waiting around for this, it seems like, for the last few years. And so maybe we do get it next year, right? Maybe it actually happens, or maybe it doesn't. What happens if the consumer gets in even a better place next year than they were this year or the year before, certainly, right? Because they're not being hit by inflation. They keep jobs, wages stay in a good place, and real wages go up. And what if the consumer bounces back hard next year? I think that's something that needs to be considered as well. So, there's two sides to the story, and honestly, no one knows which side is the right side as of right now. But you got to consider both.
With the Morgan Stanley house view, which has been pretty dovish for a while, knowing that weaker prints were coming, and I would argue fairly constructive, looking for multiple cuts this year.
Yeah, I think we're going to have multiple cuts. Probably not on as hawkish in terms of how many times they're going, or dovish in terms of how many times they're going to cut vis-a-vis the Morgan Stanley. I think we probably have probably 3 quarters total of an interest rate cut. So maybe a quarter in September, quarter in November, quarter in December. The Fed has to be careful here. If you recall, if you look back to the late 70s, when we were dealing with inflation like we are today, Volcker stopped raising rates and actually cut rates during an election year. And unfortunately, that was not a good move. Inflation looked like it was improving. He felt good about cutting, but the next thing you knew, inflation reared its ugly head like a hydra. And the next thing you knew, Ronald Reagan, newly elected Ronald Reagan, had to deal with inflation for the next 2 years. We didn't see inflation top for 2 years after that.
Yeah, but you got to consider the risk of the other side. You stay too high for too long. Decent probability you end up in that big recession with the big unemployment cycle, right? So it's like, which is more severe? And then you have to come in, and the Fed's gonna have to load their balance sheet again. I mean, that's a whole mess, right? All right, guys, appreciate you joining me as always. Thank you so much for being here. If you're looking to apply, join a private stock group, private wealth group, get access to 1000xstocks.com. We'll put that as a pinned comment down there today. You can click on that, fill out an application. We'll see if we can get you in there, access to that, and take your game up to a much higher level than where you're at right now. Much love and have a great day.